we've gotten to the point where the interest rates are pretty much at 5,000-year lows, and the asset values are pretty much at 5,000-year highs. In other words, the rates have never been this low in the history of the world, and they certainly have never been negative. And there's quite a bit of outstanding sovereign debt at the moment with negative interest rates, which is unprecedented in history. So if you posit, just from a common sense point of view, that you do best when you buy low and sell high, this is about as high as it gets.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. Founded in March 2012 with the goal of providing the lowest cost bullion available, SD Bullion has become one of the largest US-based precious metal dealers and is regularly recognized by Inc. magazine as one of America's fastest growing companies. SD Bullion continues to gain industry market share by being one of the premier low-cost options for physical precious metal bullion buyers and sellers. At SDBullion.com, you can order your guaranteed physical precious metal bullion products online, 24 hours a day, 7 days a week. Discreet, low-cost delivery is both fast and always fully insured. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today is Simon Mikhailovich, the founder of Tocqueville Bullion Reserve. Simon, thank you so much for joining us today.
Thank you for having me.
All right. Now, the first topic I'd like to discuss today, I was recently watching actually your TED Talk you gave about a year ago. It was a really interesting talk. You talked about how there are really uncertain financial times ahead, and a lot of people are thinking this way. Can you share with the viewers maybe some of the reasons why you think financial times right now are uncertain?
Sure. For the past 35 years or so, we've been in a period where interest rates have been going down and asset values have been going up. Now, of course, there have been some crises along the way, but if you look at the charts that cover the entire period, you will see that the rates have been going down and they have stayed as low as they can be since the financial crisis, having maybe picked up off the floor just a tad over the past year. And the financial asset prices have been going up. So all things being equal, the way the valuations of financial assets work is that there's a present value formula which has several inputs, one of which is the discount rate. So discount rate is the pivotal rate which determines today's value of future cash flows. And so in the environment where interest rates are persistently declining, all else being equal, the value, today's value of future dollars increases. So it's a mathematical thing. And we've gotten to the point where the interest rates are pretty much at 5,000-year lows, and the asset values are pretty much at 5,000-year highs. In other words, the rates have never been this low in the history of the world, and they certainly have never been negative. And there's quite a bit of outstanding sovereign debt at the moment with negative interest rates, which is unprecedented in history. So if you posit, just from a common sense point of view, that you do best when you buy low and sell high, this is about as high as it gets. So buying here would be buying high and hoping it goes higher, which is it's a proposition, but it's not the proposition that has worked well throughout human history. So the combination of ultra-low rates, and of course we have not had a recession for 10 years. So if you posit that there is a possibility of a recession at any point in the future, then a combination of the ultra-low rates, ultra-high asset values, and really no room built for a recession creates an environment where the upside is limited and the downside is very significant. It's the wrong kind of asymmetry. Where you can lose a lot and you can't make a lot, and you can make a little. Now, when I say that, I don't mean specific investment opportunities. I mean markets in general, diversified portfolios that allocate to markets across the board.
Now, how has inflation played into this? Because I know in your TED Talk you were talking about how it gives a distorted view about our finances. You talked about how over the last years, Americans have really not actually gotten a real wage raise. Can you expand on this?
Sure. This is I will expand on this in two ways. In the way that in which I mentioned it in the TED Talk, but I will also add something different that I think is not very well understood in general. Inflation. Well, first of all, we're all human, and we look at our salary, and we get a raise, and then we get another raise, and we get another raise, and over time we look at what's called nominal numbers. The actual dollars that we make, and we feel better that we're making more dollars. Now, of course, in real life, the number of dollars that you make is not really relevant. What's relevant is the purchasing power of your salary. Whether you can pay for your rent, for your health insurance, for whatever expenses you need relative to what you make. The numbers themselves are it's an artifice. If you're in some other countries, if you're in, for example, if you're in Japan, you have to multiply everything times 100. So the nominal numbers don't matter. What matters is what those numbers buy. So people feel like they make more money, but if you look at the real numbers, meaning netting the effects of inflation, you will see that Americans on average, American wages have not increased in 30, 40 years. So therefore, you have to posit that the purchasing power, at least in some areas, has declined. The reason I say that is because some of the inflation is a term of art. It's an aggregate calculation that's performed by the government, and actually the algorithm, the formula behind this calculation has evolved over time, and so it is subject to, I wouldn't say manipulation, but it's subject to being adjusted to the point where it shows things in a certain way which may or may not reflect reality. I'll give you some specific examples. So if, for example, if the salaries of American workers on average have not risen over the past, 40 years, the purchasing power versus, let's say, electronics has in fact risen because the price of electronics has declined, but relative to the inflation. So if you say that the average inflation rate is, you can say whatever it is, 2-3%, it doesn't really matter. If you look at the components within that, you would see that, for example, things like electronics, certain consumer goods, particularly stuff made in China, particularly things of not very high quality, have either kept pace with inflation or actually declined in price. But there are some things like healthcare or college tuitions or cost of certain services that are not outsourceable to other countries with low wages have increased. So it's a fairly complex situation where people's purchasing power relative to some things like flat screen television sets, for example, has increased, whereas things that are not not outsourceable, the purchasing power has declined. Healthcare and say education and some other costs being the primary culprits. So people feel that maybe they feel relative to certain trinkets that they're making just as much, but relative to things that are important, you can express it this way: things you want, the gadgets, have kept your salary has kept up in most regards. Things you need, services and healthcare, inflation has outrun the salaries, and so people's standard of living relative to certain necessities has declined. Now, I said there are other aspects to it. So people, to sum up of what I just said, is that looking at your salary from a nominal standpoint and thinking you're making more money is maybe emotionally gratifying, but when you dig deeper and you realize what you can afford and what you can no longer afford, or what you can afford less of, it's probably one of the reasons we're seeing the political divisiveness and turmoil and broad dissatisfaction in the face of what seems to be a healthy economy, but underneath probably isn't nearly as healthy as it appears, or at least not as far as it affects most people. Now, there are other aspects to it. So people say that inflation, there is no inflation. Inflation is low. It's 2% or so. And that is because the inflation measures that we have are based on the industrial society that we used to live in, where the cost of industrial goods is what determined inflation. We live in a financialized society where financial assets play as a much greater role than they ever did before. And one prime example how it affects everybody is, for example, 401k plans, pension plans, and other various savings vehicles through which Americans save, or Americans and other people in other countries save for their retirement. So what used to be saving has become investing through financial assets. What I'm aiming here is this. The mechanism for creating inflation, traditional mechanism, was for the central bank to print money, and for that money to end up in the hands of the population. And the population then takes this money and starts buying up scarce goods and services, regular goods and services, like consumer goods and consumer services, and thus bids up the price. So there's a fixed amount, or let's say not fixed, but constrained amount of goods and services. And so all of a sudden, when the availability of money to buy these goods and services increases, the prices, the demand increases, and that drives the prices. That's conventional inflation. That's what we understand as inflation. So when people say, oh, inflation is only 2%, that's kind of the paradigm in which that idea lives. Now, if you go back to 2008 and look at what the governments and central banks did and how they printed the money and where the money went, you would observe that the money did not go to the population at large, as has been the case in the previous inflation episodes. The money went to the banks, and the money went to the asset owners, to the wealthy. And the mechanism for that was the quantitative easing, where the central banks went out and started buying securities in the markets. In other words, they, instead of chasing, frying pans and refrigerators, the central banks went out chasing financial assets and giving the money to the banks, who also chase financial assets. So the transmission mechanism that has traditionally driven inflation has been changed. And so even though people think that we are in a massive bull market for stocks and bonds, one can also say that it's high level of inflation in stocks and bonds. And the reason I say that is because by increasing the price of a stock, or by the stock prices rising significantly, whereas the earnings of the companies have risen, but not quite as significantly, that's a similar situation as with goods and services. It's inflation. It means that the prices are higher than organically they would have been without the introduction of this money. So when people say that inflation is constrained, I would say that it may not be. You can also observe this phenomenon in the fact that the beneficiaries of the higher asset prices have been the top, people, the proverbial 1%, but let's say it's several percent, who own the majority of financial assets. And then if you take that further and you look at the prices of collectible cars, fancy apartments in New York City, and other, luxury places, you would see there have been tremendous increase in prices. So the classical system, the way it works, it's working. It's just a different, it's a different situation this time. But the mechanism is working as it normally does. People who got the money are chasing goods and services that they chase, which is financial assets and luxury goods. And the prices of those specific assets that are being chased with this printed money have been going through the roof. So there is inflation. It's just not the conventional inflation that we are used to perceiving. And it's deceptive because people don't necessarily recognize it as such. So thinking that you're in a bull market, when in fact it's inflation-driven, or it's monetary inflation-driven, meaning there's more cash chasing the same amount of stocks and bonds, it makes people, it sort of puts people to sleep as to what's really going on. And to understand the dynamic here, all you need to do is Venezuela. Look at Venezuela. It has the best performing stock market in the world in nominal terms, not in real terms. So I would suggest that financial assets across the Western world have become inflated in nominal terms, but their real value perhaps is not as high as the nominal prices suggest. I don't know if that answers your question, but that's kind of how I see it.
Yes, definitely. And on this premise of, the stock market possibly having a long way to fall and not necessarily much potential upside going forward, I was really interested to get your insight on how, because I know you grew up in the Soviet Union, and that has taught you a lot about protecting oneself in tough times. So as we see this crisis possibly, coming soon, how has growing up in the Soviet Union, how did that teach you about how to prepare going forward?
Well, in this regard, growing up in the Soviet Union, although the political system was completely different, was not that different from the United States of the earlier 20th century, in a sense that there was some basic social infrastructure in terms of, disability payments or, pensions for retired people, but there was really no there was really no, like, say, banking system. I mean, there were depository accounts, but if you needed to borrow money, you had to borrow money from friends. If you needed the healthcare system was very primitive, which means that if you were waiting for the ambulance to come, you may die. So you have to have friends with a car. You have to know somebody with the car who would take you to the hospital if you need to. If you need, there was childcare, but if you needed something extra, you had to rely on other people. What I'm aiming at is the difference between our society today and the society that I grew up in is that because of primitive infrastructure and the lack of services which we take for granted, people had to rely on each other. So relationships between people were at a much deeper and stronger level, because if you can do everything yourself, if you basically don't need other people, you don't. I don't want it sound callous, but you don't need friends. I mean, you want friends for emotional reasons and for human reasons, but you don't literally need them for your living, for fulfillment of basic, services and functions. And exigencies that we get in life, that we meet in life. So the Soviet society, as complicated and as pernicious as many of its aspects were, was actually at a human level, was a much more tightly knit society, in a sense that people had to rely on each other and build friendships and relationships that were deeply meaningful, not just emotionally, but also from a purely practical standpoint. Now that type of framework, and I believe that early 20th century America was similar in many regards to that. There wasn't the Great Society and the safety nets. People had to rely on each other. And if you needed to borrow money, you had to borrow money from your friends. And of course, you had to pay it back, because if you didn't pay it back, you'd never borrow money ever again from anybody in your life. That would be it. So people's credibility and their truthfulness were very highly valued and important. I think that's the key to resiliency in a sense, because rather than relying on anonymous institutions that are out there, having the relationships in your community with people who know you and whom you know for many years and well is the most robust and the most sustainable way of surviving adversity. And that's what makes some societies more fragile than others. The Russian people traditionally have been incredibly, hardy when it comes to privation, ability to withstand privation and self-sufficiency. Well, the other thing is because you didn't have supplies of fruits, fresh fruits, vegetables, and so forth. Everybody had a little victory garden, and they worked on that garden all summer so that they can can fruits and vegetables and whatever they grew there for the winter for their own family. So, it's a little bit of a nativism there, but those were the conditions. And I think that it's not necessarily a bad idea to think in those terms about all of our lives, because that dramatically increases the robustness and decreases the fragility of the society that we live in and of our own circumstance. If tomorrow ATM machines go down, for example, which, by the way, doesn't necessarily have to do with the financial crisis, happened right here in New York City after Hurricane Katrina. And if you don't have any cash, what do you do? If you don't have a little reserve, how do you navigate that? There's just a little example. So that taught me the value of having reserves, of having just basic I don't know, Boy Scouts. I mean, why did Boy Scouts develop in the early 20th century? For the same reason, ability to navigate under adverse conditions. And I think we've lost a little bit of that because of the cushy life that we've had, or most of us have had. But I think it's important to think back to the basics and realize that the society is fairly fragile because of the debt, because of the financial excesses that have taken place, and because of the political divisiveness that we're observing, which are, by the way, I consider to be a symptom of financial problems as opposed to a thing in itself. Of course, it's a problem in itself, but the reason comes from deeper problems in the society.
Now, before we let you go, I did want to touch on one last topic. You're talking about really getting to the foundation and really getting back to, more self-sufficiency. What is your perspective on when it comes to finances, how people can prepare for the coming crisis?
Well, I'm not a gold bug, and I've never really been, I don't have any particular ideological affinity to gold, one way or another, physical gold. The reason I came to appreciate, I guess, it is because I realized the situation with the financial assets and the fragility of the financial system, and identified gold as something that offers certain features that other financial instruments do not offer. We live in a digitized world, and we live in the world of centralized financial system where it's highly regulated. And it's centralized. And so all of our savings are essentially, if you think of eggs in different baskets, all of our savings are in this digital, cyber-exposed, financialized basket with lots of leverage and lots of different issues that can suffer bad outcomes. And so there are not many opportunities to diversify away from that in a format that would provide not just safety, but also liquidity. Or purchasing power. So, of course, you can buy another farm, or you can buy land, or you can buy buildings, or you can buy a lot of real assets. I mean, most real assets do not get involved in the financial system and the systemic risks that financial assets have, but none of those assets are liquid. Most of those assets are not portable. Gold just happens to be the only financial asset that is universally liquid, portable, and completely independent from the financial system and from the financial and systemic risks that all financial assets are exposed to, and also cyber risks. I mean, gold is the only cyber-immune financial asset. Physical cash, of course, and having some physical cash on hand makes a lot of sense, but in large quantities, because of the regulations, anti-money laundering and terrorist financing regulations, it's really became non-feasible to store and be able to use significant amounts of cash. And so that's kind of brought me to physical gold. So from a financial standpoint, I think that diversifying and having some gold reserves, that's my conclusion. I mean, that's what I did, and that's why I started this business, because I didn't think there was a lot of legitimate ways for people to do that or convenient ways for people to do that. But in general, I think that owning some gold, whether it's coins or whatever, makes a lot of sense. And then having some cash on hand makes a lot of sense. And being very prudent with the types of investments you have. But I think, the risks in financial markets are significant at the moment.
Definitely. Well, Simon, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had? I know people can visit your website, Tocqueville Bullion Reserve. It's bullionreserve.com. Did you want to share with the viewers any last thoughts you had?
I do. I would like to tell everybody who's listening is that change is incremental, always. And it's difficult sometimes for most of us to perceive change until it reaches critical mass to the point where it takes a dramatic turn, just like happened in 2008. For example, my partners and I were able to see it coming because we were involved in the structured credit markets. Most people didn't see it coming because it was outside of their sort of immediate expertise, and they weren't paying a lot of attention. I would urge people to pay attention, to watch what's going on in the political system, what's going on in the financial system, read the papers and get educated, because ultimately all of us are responsible either for ourselves, and most of us are responsible for other people financially. And so to the extent we're not getting educated and are not getting information, alternative sources of information, not just mainstream media information, about what is going on and the risks that we're facing, it could be a very painful lesson, and particularly not just for us, because if we don't pay attention, I guess we deserve what we get. But those who rely on us, the miners and the older people, I mean, it's not their fault. So I would urge everybody, if they can, to please take some time to get educated and to learn more and to understand better what's going on and form your own opinions. You don't have to take my opinion or anybody's opinion. Form your own opinion based on facts. I think that is the most valuable and the most important thing that anybody can do for themselves. And then from that will come decisions and questions that you need to ask and things that you need to do. But ask those questions.
Definitely. Simon Mikhailovich, thank you so much for joining us today.
Very welcome.